What does the watch market collapse mean for the gray market? If you don't already know who I am, my name is Roman Sharf. I've been a gray market watch dealer for over 20 years. So let's jump into this video. The luxury watch market has seen unprecedented highs in recent years. Over the last year, prices have pretty much stabilized. And some people are calling it a collapse because they stabilized at a much lower number during the COVID highs, right? Collapse is a bit strong. I would say a correction is what took place the last 2 years. Before I get into the why, I will tell you that there was that few months before, quote unquote, the COVID craze started, the market stopped dead. Nobody knew what to expect when COVID hit. First off, people couldn't travel or go out. That resulted in excess income, and people turned to buying watches. Rolexes, Pateks, APs, Richard Meals, they were all flying off the shelves, with many of these pieces instantly appreciating in value. With the production slowing down at the same time, watch collectors and investors alike focused to the gray market to get their hands on these rare, hard-to-find models. This led to, drumroll please, price hikes. Some as much as double, triple, even quadruple, and I've seen some watches trading at 5 to 10x even, believe it or not. From the start of Q1 2021 to, let's say, March 2022, the overall market index increased 39%. Take that with a grain of salt because, you know, those indexes were combined by only using a few particular resources, if you will, right? It wasn't just about owning a luxury watch anymore. With financial markets going haywire during the pandemic, many people saw these watches as an investment. 20 years I've been preaching the same thing. Watches are not an investment, they are an expensive toy. That entire theory of mine went down the toilet, or so everybody kept telling him, but I told them, wait, it takes time. With less supply coming out from authorized dealers, gray market sellers who already had stock could charge premium prices. Makes us sound to be the evil folks in this equation. No, the wholesale price grew just the same as the retail price, and the gap in between was still anywhere from 10 to 20% max, depending on the watch. And with Rolex, it was usually a lot less. I actually prefer the normal market or the down market because the hotter the market, the less margins we actually made. COVID-19 obviously pushed people to shop online, right? The gray market's strong online presence let us thrive while physical stores were mostly shut down. Of course, more buyers meant more competition and prices just kept climbing. There's a humongous network of B2B that goes on in the gray market. There's a certain percentage of dealers that are out there selling to each other. And with the prices climbing up almost daily, what ended up happening is you could have 6 dealers trade a watch among themselves, all making a profit, while it still did not make it onto a retail client's list, right? So it's a combination of things. It wasn't just the market conditions, if you will. You also had clients that, quote unquote, became dealers. They had certain relationships in certain places where they were still able to get merchandise, and what would they do? Rather than putting it on their wrist, they would sell it to guys like us at a profit because the market was already set. And we in turn would sell it at a higher margin. The Daytona Steel white dial, at its peak, it got up to like 55 grand. Nautilus 5711, at its peak, it got up to almost $200,000. Audemars Piguet, the 15202, went up to as far as $125,000. And only 2 years later, these prices, they're long gone. For 9 consecutive quarters since, the overall market index has decreased 38%. It was 39%, while it went down 38%, which means the market has stabilized. And watch prices, particularly in the secondary markets, have dropped as well. And this could spell trouble or opportunity depending on who you ask. The COVID dealers, the backpack dealers, as I like to call it, and all those that jumped into our industry thinking, oh my God, this is a gold mine. A lot of those guys are out of business. Some are even in federal penitentiaries, and won't mention any names. China's economy forced to slow down in 2023 due to a combination of factors, including the lingering effects of the strict COVID-19 policies. And since China is a major market for luxury goods, including watches, this economic downturn, it led to a decrease in demand for high-end timepieces. Prices on the secondary market began to drop as supply exceeded demand once again. Now, how big is China? China made up for 60% of all spend on all luxury goods in the world. And 22% of that was watches and jewelry. And even before the economic slowdown, Chinese consumer behavior had been shifting. There was a growing preference among younger Chinese buyers for luxury experiences over product, which impacted the luxury watch sales, right? Now, as China eased the COVID-19 restrictions, global supply chains began to stabilize. Watch manufacturers that had previously struggled with production delays were able to ramp up production, releasing more inventory into the market. This increased supply, coupled with waning demand from Chinese buyers, led to more watches being available, further reducing prices in the gray market. Of course, fluctuations in Chinese yuan also played a role. A weaker yuan made luxury goods, including watches, more expensive for Chinese buyers. Daytona Steel white dial, remember the one I told you that traded upwards of 55,000 brand new? Today, they're trading around 28,000. That 5711 Nautilus I was telling you about, anywhere from $85,000 to $100,000. And the Audemars Piguet Royal Oak 15202 is now down to $55,000. You'll say, oh my God, what a crash. Is it? The Daytona retails for $16,000. The Nautilus retails for $40,000. The Audemars Piguet also retails around that $40,000 price range. They have come down, but the prices have stayed up. So before we get into what this means for the industry and the customers, let's talk about the gray market. For those that are unfamiliar with gray market, the gray market refers to nothing but the secondary market where luxury watches are sold, or any other goods for that matter. It allows us to offer rare watches at higher prices, more recently, or usually as it's been for the last 20 years, at significant discounts, unlike a local AD. Why gray market? Because we are selling pre-owned goods, which a lot of ADs do not have. We're also able to deliver brand new goods at a cheaper price than the MSRP. And many others turn to the gray market because we offer access to highly coveted, waitlisted models that authorized dealers just cannot supply either fast enough or can't supply at all. Over the boom, the idea is that all gray market dealers do is sell stuff overpriced in order for you to be able to get it. Absolutely not. Look at our website, and 90% of the stuff that's on our website is discounted off of the MSRP. So how will the gray market survive? All right, first let's talk about prices, right? When the luxury watch market was at its peak, gray market dealers had the upper hand. We could charge massive premiums on models like Rolex Daytona and Patek Nautilus, but as demand cools and supply catches up, we're seeing prices fall, and many dealers are sitting on inventory that purchased at peak prices. Lower prices may sound like a win for buyers, and it can be, but it also means that many gray market dealers are facing losses, especially if they stocked up on inventory, expecting prices to stay high. Anything outside of AP Royal Oak, Nautilus Aquanaut Patek Philippe, stainless steel Rolex, or actually Rolex was the one brand where most of the product was going over list, right? But that was it. There's 1,000 other brands out there that didn't really jump up in value. They may have rose 10, 20, 30% along the growth of the watch market, but none of them were trading a double, triple, quadruple list. And I guess worth mentioning, another effect of the market shift was, shift in dealer strategy. Gray market dealers who once focused on selling only high demand models might now diversify, offering more accessible brands like Tudor, Omega, cater to a broader audience. They're also beginning to stock watches that are not typical hype watches, looking for a specific clientele that appreciates the horology and exclusivity of these models. But for those that were concentrating on just the hype stuff in the 3 years, it's a minute too late for them, because the type of clientele they attracted is the type of clientele that was mostly, first and foremost, looking for the dollar signs. And those clients are no longer around, which is why I always chose my company to be completely diverse at any given time, regardless of market. May I have more Rolexes, more Pateks, more Nautiluses, Aquanauts, and Royal Oaks in stock at the time where they're more in demand? Absolutely. Will I forget about the other guys? Absolutely not. I also know some dealers are pivoting to offer more services like trade-ins or watch servicing to maintain cash flow. In short, they're evolving to stay competitive in the market that's no longer solely driven by hype. Let's talk about what this means for the buyers. Well, obviously, the most obvious thing is a buying opportunity, right? Buy low, sell high is what they say. But because I hope for most of you, this is actually a hobby, a passion, and you're in it for the horology, not for the money, it gives you a humongous buying opportunity. Because if the gray market may be cooling down, this is a golden opportunity to snag some incredible deals. But it also is a buying opportunity for us. So it is a buying opportunity for all of us, dealers and clients alike. So what's next? What's next for the gray market? Now, while the correction has certainly shaken things up, don't count us out just yet. The gray market thrives on adaptability and demand for exclusive models, right? And while we're in a bit of a downturn, you would say, luxury watches are still timeless. Once the market stabilizes, we'll likely pick back up, especially for iconic pieces. So normally you're gonna see down, stabilization, which looks like this, and then a slight increase, which still looks like this, because again, I've always said, it's plus minus 10, 20%. So whether you're a seasoned collector or just dipping your toes into the world of luxury watches, the market is evolving fast. Stay informed, stay savvy, and who knows, you might just find your next dream watch at a price you never thought possible.